Devon reported earnings that were much worse than expected. What was the biggest miss, Stephanie?
Yeah, a lot of it was price realizations for oil and nat gas. Lower prices, obviously, it hurts them. They did fall short on production, though, as well, and that a lot had to do with facility closures that they explained on the call were really more one-time events. And they're fixed at this point. So that impacted them substantially in production. And so I think going forward, at least you're off of a very low base, but you can kind of crawl back in terms of more normalized levels.
Now, they've been working on moving from natural gas to oil, but do you think the natural gas side is still weighing on the company?
Yeah, 60% of their reserves, so certainly it is still very big, but they are rapidly changing this structure. And in fact, they announced a joint venture today that I think actually trumps the earnings. The announcement, they have one with Sinopec, and they just announced another one today. And the price that they're getting, they're able to accelerate their production of oil. They're getting it at a very accretive price, very attractive level, and it kind of takes some of the financial burden off of them as well. So I think this is what we were waiting for. We want them to transition quicker to oil, obviously given the price environment. And as they do that, unfortunately, costs go up. But I think you can also explain that away. I mean, you know that oil, producing for oil is much more expensive than nat gas, and I think that investors understand. So I think people want to see them make this progress, make this transition faster, and I think the announcement of the joint venture actually is a confirmation of that.
Do you think we'll see more joint ventures with these guys going forward?
Yeah, I do. I absolutely do. And it does help their balance sheet, certainly. That's one of the strengths of the company. It's one of the best balance sheets in the industry. They've got $7 billion in cash and short-term securities. They generated over $2 billion this quarter. So they can continue to fund these changes and fund their strategy. And unfortunately, they still have the nat gas overhang, but I think at least they're making progress. So we were in the market buying it, and we will continue to buy it, particularly if it hits mid-50s.
Now, this has been a tough stock all year,
yeah.
and you continue to own it, and you said you're still buying it. And what's the catalyst for you?
Well, the catalyst is that they continue to deliver on their strategy in terms of changing and getting more oil-based versus nat gas. And I think as they do these projects and you continue to see more updates on other joint ventures, the stock can move higher. I just think that at this point, the stock is way too cheap to sell. And I think, I've seen several various different NAVs for this company, and it's anywhere from $90 to $100. I think that's a bit aggressive. I'll take 80 at this point, and even at a discount to that, so I see it easily bouncing back to the mid-60s, low 70s over time. This is not an overnight story. It's certainly not a day trade in any way, but I do think if you have patience, you'll be rewarded.